On Hot Picks this morning, we are looking at software stocks, and we're joined by Brad Sills, Senior Software Analyst at Bank of America Securities, in from San Francisco. Great to see you. Thanks for joining us.
Thank you, Andy, for having me.
Could we start off with Salesforce? You see promise in this stock, and just remind us what they do, essentially.
Sure, yeah, happy to. And thanks again for having me, Andy. Great to be here. Salesforce is the leader in sales applications for the large enterprise, and so they sell a suite of products that help automate the sales function across sales organizations, marketing departments, and service. And it's an end-to-end solution that is fully integrated on their platform. We like Salesforce because it fits into a category that I'm kind of defining as defensive growth. We want to be positioned this year for stocks that could have good free cash flow support, good valuation support, and are not trading at a high multiple in this environment where we could see some slowing in growth and investors becoming potentially more defensive. We think a stock like that with that profile will act well in this environment. We also want to be positioned in stocks that have good options for growth. And we think Salesforce is one of those businesses that is well positioned in the cloud, which we think is an enduring cycle for them. They were the leader in the cloud in this category. They have an end-to-end product to sell more and are still benefiting from the tailwinds of adoption in cloud, but also well positioned for AI and agents. The company has a platform called Agentforce, which we think is very promising for additional automation benefits through the use of AI and agents.
Microsoft, another partly an AI play. Why do you favor this stock?
Microsoft also fits into that same category. We think it's a good stock that would behave well in a defensive environment with real free cash flow support, but also a company that's well positioned for the growth opportunities in software. Again, cloud and AI. The company has the Azure data center infrastructure platform that is running some of the largest LLMs on the planet on their data center, and that provides a real benefit for them, not only in the cloud as they generate more scale and can cross-sell more products, but also to support other AI offerings that they have across the Microsoft stack. So it's one of few companies that is actually participating in the AI cycle across both applications and infrastructure with their Microsoft 365 Copilot products sold into the Office installed base. We think that product cycle is very promising. But then on the Azure side, they have a robust offering to help enterprises take on AI in the enterprise. And so Microsoft, another company that's very well positioned for both the cloud and AI, but also has a very solid free cash flow base, which provides good support for the stock. So another one that we think fits into that defensive growth category.
And then finally, HubSpot. This stock has come down significantly since mid-February. Can you remind us what they do?
So HubSpot you can think of as a mini Salesforce. In fact, they sell what Salesforce does to the enterprise in the SMB, small and medium-sized businesses for HubSpot. That's their end market. And so they have an end-to-end solution that covers the gamut from sales to marketing to support as well. But it's really a platform that enables that for small businesses. And it's appropriately priced as such. The product feature set is well developed for the SMB. Really custom tailored for the SMB market, and it's a very large end market. And so we think they're in a very good position to consolidate that end market through a cloud-based offering that is end-to-end and also very well positioned for the coming AI cycle. As you can tell, there's a theme here. Cloud and AI are the secular drivers that we are positive on, and we think HubSpot is very well positioned, like Salesforce, to take on more and more functions of what the sales and marketing person does in these organizations through agents, which we think is a monetizable opportunity for the company.
That's interesting. So if I'm running a sales organization, I'll be able to use these AI agents to ferret out leads, or how would I use them?
That's one use case, absolutely. You could use it to generate leads. You could use an agent to monitor social media feeds where some consumers or enterprise customers might be talking about your brand. You can also use an agent to generate content for an email campaign, for example. You could use an agent to generate content for your website. And so there are a number of use cases that we think are exciting for agents in the front office category. And the interesting thing about front office opportunities for AI is that the ROI is most compelling, because if you can save a salesperson's time, you can generate more uplift in sales. And so we think that with this coming cycle, the sales application vendors are very well positioned for the AI cycle with agents.
Thank you very much indeed for joining us, Brad.
Thank you, Andy, for having me.
Brad Sills, Senior Software Analyst at Bank of America Securities. Coming up, we're in the